Welcome back to M&A Access. My name is Katarina, and today we are here in Chicago for the summer conference. And joining me, Joaquin Contreras. Yeah. Welcome to the show.
Thank you, Kimby.
Thank you so much for joining me today. How are you feeling about the summer conference? How is Chicago treating you so far?
Wonderful. I just think that, coming back to Chicago every time is just gorgeous. Beautiful city, especially in the summer.
Yes.
So it's been great.
Yes, yeah. So let's start with your background. Tell us a little bit about yourself, and you work for 414 Capital. Tell us how you ended up in that company.
Yeah. So 414 Capital is a mid-market M&A firm, which has evolved into a platform now. We're a big firm, 60 people in the team. We have 4 people in the U.S., 1 person in Colombia, 1 person in Canada, 1 person in Madrid. So in a way, we cover the whole Americas. And I previously worked at BNP Paribas for the Latin American team. Did transactions pretty much all over Latin America. And then I got drafted by 414. It was a small team, and now it has grown. When I joined 414, we were 8 people, and now we're, as I said, 60. So a lot of growth in the last years. It has been very, very interesting.
How long ago was that?
Well, I joined in 2018, so around 8 years.
Mm-hmm.
Yeah.
Mm-hmm. And the topic of our conversation today will be the differences between U.S. M&A and LatAm M&A.
Yeah, great.
Yes.
There are a lot.
Yes. So why is it such an important topic in M&A industry right now?
Well, I think that cross-border keeps gaining more and more traction throughout time because we have become a more global society. And especially right now with the geopolitical moves, I think there's a lot of focus in looking for companies in the Americas, especially for manufacturing. Even though this has been the case for Mexico especially, always trying to sell goods to the U.S. Right now with all the battle with China and other manufacturers around the world and trying to consolidate the supply chain and move it towards closer allies or countries that are at least in the same time zone.
Mm-hmm.
That's where Mexico has gained a lot of leverage, and also Latin America. So we're seeing a lot of manufacturing transactions happen today, even though they're normal for us. But now I see a lot of interest from people from the U.S. trying to see how they can penetrate the Mexican market.
Besides the time zone, obviously, what are other big differences between U.S. M&A and LatAm M&A?
I would say the main difference is just the way people think. And I would say that in the U.S., everything is very systematic. Mm-hmm. Like, for instance, in this conference, the probability that you could tell one private equity from another private equity apart is very hard. They all know the script. They all know what to say. They all, when you jump into a call, they know which questions to ask. And everything here is sort of, part of a big system. Whereas in Latin America, that's not the case. Americans are very good for planning, and Latin Americans are very good at improvising. Mm-hmm. So when you jump on for whatever call, it doesn't have to be M&A necessarily, but people in Latin America don't tend to prepare that much for anything. It's quite of a wild ride when you're in these calls. Maybe the information is not there, or it's not pristine, it's not clear. So it's more of a gut feeling and just going with the flow and kind of thing in Latin America versus the U.S., where everything is much more systematic.
What about cultural difference too?
Culturally,
the way people have relationships, the way people talk.
Yeah, well, what I've seen is in Latin America, people tend to be more personal, and then business comes after. They rather have a connection with you, and they don't want to be used. Like if you want to approach someone because maybe you're trying to get an introduction to their company to be able to present yourself and maybe sell their company eventually, they will first want to have a connection with you. Whereas here in the U.S., you might approach someone with the end goal of selling their company, and they'd be very open and very comfortable with you just approaching them because you want to sell their company. Mm-hmm. So I see that in the U.S., it can be business first. Maybe you can find some connections in the way, which is good. But it's not necessarily the obligation, whereas in Latin America it's very hard to get through someone if you don't have that kind of personal connection. So I'd say that'd be a very big difference.
Mm-hmm. How does trust building differ in LatAm transactions compared with U.S. deals?
Okay, so I think in the U.S. people are more keen on trusting people. If you are a hard worker and you look the image and you have the track record, people will trust you, or at least they will, open the door. That's my feeling. They will hear you out and give you a chance. If you mess up, then you're out of there. But at least they will be more open to give you a chance. In Latin America, relationships run really deep. So if you're not part of the circle, it's very hard to be part of the circle.
Connections.
Yes, and it's more like if there are family ties, or if you went to the same school and that kind of thing. That is helpful in the U.S., but in Mexico, it's more like, or Latin America, it's more like a must. It's like this very close-knit circle where you need to have like these deep connections. Or at least someone with deep connections has to make the introduction. Whereas here in the U.S., you can just approach someone right now and say, "Hey, I'm an investment banker. Give me a chance." And there's a high probability that they will, at least give you a call. Mm-hmm. Where in Mexico or Latin America, I don't think that's the case.
So, what do U.S. buyers often misunderstand when they first enter a LatAm transaction?
I guess the biggest mistake is assuming that LatAm transactions are going to behave just the same as the U.S. transactions. LatAm transactions, they take a little bit longer. The information is not, as I said, very clear at sometimes. It's hard to go through the weaves, and also the Latin American ecosystems, they're not very business friendly. So the tax ecosystem is very aggressive. Legal side is very tricky as well. There's not a lot of trust in the judicial system. So there are a lot of differences that appear when you're doing an M&A transaction where, with reps and warrants and whatnot, and you're trying to close those gaps through legal framework. But in Latin America, that is not very strong versus here in the U.S., where everything is just, it's like boilerplate. There's a lot of solutions. There's a lot of ways to mitigate those risks. And in Latin America, it's not that easy. Mm-hmm. So I think that's a big barrier for U.S. players trying to enter the Latin American market.
Mm-hmm. So walk me through a typical cross-border transaction, step by step. Where do you start?
Okay, so it'd be very, very similar to a domestic U.S. transaction. You would approach the seller, and ask for information. The differences, I guess, are in timing and quality of information. U.S. sellers and buyers are more familiar with the M&A market. They almost always know what to do or what information to hand over. Whereas in Mexico or Latin America, you will see that the seller is not very familiar with M&A. So that stage can take a little bit long. And also in Latin America, they tend to prepare like two sets of information. One is for the IRS or the equivalent in Latin America, which if you look at those businesses, they are not very profitable because they want to pay the least amount of tax. And then you have a normalized version that reflects the operation. But then that's where a lot of contingencies come up because the audited financials and then what you're declaring to the IRS, and then it's a hard place to be in. So that takes a bit of a long time. It's great to have an advisor to help them prepare the information to explain how the business is truly behaving. So that's the information request part, and then you move to the standard processes where you put maybe an IOI, and a letter of intent, and then do a due diligence, and then move into closing contracts. So it's very similar. I would just say that it's a bit tricky on trusting the information that a Latin American business can hand you. Sometimes it's not that trustworthy, or at least if you're not used to that, it might seem like it's not trustworthy.
You mentioned due diligence. How is that different in LatAm transactions?
I think it's more of the same. You would ask for the same stuff, you would ask for the same information, you would run the same processes, but the availability of information in Latin American countries, what I've seen is that it's not as reliable as the one you find here in the U.S. So it's tricky to navigate through that information. But if maybe you take a month or a month and a half here in the U.S., you will take maybe 2 or 3 months in Latin American countries. It doesn't mean it can't be done because we do a lot of transactions like that. but it's just going to take a little bit longer, and you have to be a little bit patient and be willing to dig through the information to understand it better. I would say that's a big difference in the due diligence process.
Mm-hmm. So what are some red flags in the cross-border transactions?
I think it's always on the tax, legal, and maybe some permits kind of side of the equation. Here in the U.S., as I said, everyone's very systematic, and everyone has their permits in order, and because there are very serious consequences if you don't have those permits. Whereas in Mexico, the enforceability of the law sometimes it's not as strong as here in the U.S. So people tend to maybe if they have to renew a permit, maybe they don't do it, or the probability that it hasn't been renewed in years, it's a very high probability. So you find these things where maybe also on the corruption side, we have been in transactions where sadly there's a lot of corruption in many companies, and that's where I guess our advisory ends, because we can't advise someone who has those practices, but it's sadly a reality in Latin America, and that's something that a U.S. company will never allow. So a cross-border deal is very hard to pull through if there are any corruption things going around. And also on the tax side, the tax authorities are very aggressive in Latin America, and the framework is very tricky. So you see a lot of contingencies on the tax front as well. And whereas here in the U.S., that tends to flow more smoothly, in a cross-border transaction, that can be a little bit tricky.
Mm-hmm.
Yeah.
So without naming any names, I want you to share with me a story of a deal that just went so chaotic, but still succeeded.
Oh, okay. Good thing you said, but still succeeded. So I guess a good story is we were saying this company that they used to do the two-factor authentication factor for whenever you forget your password, you get this SMS, this message that says, this is the code to enter your account. So we were advising on the sell side for this company. This was a Mexican company, huge company. They were the largest consumers of SMS in Mexico, and the buyer was Twilio. It's a huge public company in the U.S. And when we started the process, our expectations of value were, let's say, I'll just say a random number, 20. And through the process, that number went up to like 40. We made a competitive process. All the buyers were international. And then Twilio was the highest bidder. And then when we started sharing information, a lot of what I've previously mentioned happened. They shared financials. Let's say round one, they shared a couple of financials. They went through them, and then when they asked for maybe an update for the next month, the financials changed dramatically. So the buyer started to distrust the information that we were sharing, and eventually dropped the price to half. So if we were talking about 40, they dropped it to 20, and luckily for us, it was still a very good deal. But I think we left a lot of money in the table just because, there was some slight difference in the financials, and we just conveyed that there was not a lot of trust in the information that we were sharing, and that's this process was a very accelerated process. This was during COVID. Everything was moving really, really fast, and we didn't have the time to sort of prepare the company, go through the information, and say, hey, this is the information package that we're going to share. Mm-hmm. We were sort of under a very strict timeline, and sadly, we couldn't send this message of trust on the information that we were sharing, and yeah, we got a slash in the price. Even though we got a really good deal, we could have gotten a much, much better deal.
I have a random question. Do you guys have translators working in your company, or how does the communication side is being handled?
Well, fortunately for us, the majority of our team is bilingual. So,
okay.
Yeah, so we all tend to speak 2 or 3 languages. So we're able to sort of handle the translation. Yeah, and most of the teams in Mexico as well, for just to say legal or tax or accounting, the probability that they will have bilingual people in their team is very high. So there's not much of a barrier on that part of the equation. Yeah.
Because I was wondering, like Google Translator, is it ChatGPT? Like, what are you using to, make sure the message is sent correctly?
Yes, I think it would be risky to use those tools because you never know what you're going to say, or it's better to have a local advisor. Like if I would do something in Asia or a country that I'm not very familiar with, I would certainly go with someone local to tell me, hey, these are the customs, this is the way this country operates, because maybe you can, with a good intention, say something that may offend another person,
right.
And then maybe a deal is just thrown to the wastebasket because of a very silly thing. And that's maybe, like in Latin America, there's a lot of emotional things going around the deals. So if you mess up on that front, even if your offer is really good, they might just, they just don't want to sell to you because they felt offended because of something that you might have said or the way you approached the transaction. So yeah, I would always, rather than go through Google or ChatGPT, I would ask someone local and say, hey, how do I go about this?
So let's talk about risks now.
Okay.
How do buyers think about risk differently when looking at LatAm companies?
Okay. So whenever you're building a discount rate in anywhere in the world, sort of the risk-free rate is always U.S. Sort of risk-free rate. And you build up on from that. You sum maybe currency risk, country risk, equity risk premium adjusted by the country you're in. So there's a lot of risks for sure, and some of them are very easy to measure economically, like the ones I just mentioned. But there's also political risk, security risks, and that kind of thing. Sadly, Mexico, at least, is going through a very tough time right now in terms of security. There's a lot of penetration from the cartels, and there's a lot of extortion going on. So those are some factors that you need to take in, especially if you are in a retail business or a business that maybe interacts a lot with these criminal groups. But yeah, there's certainly a lot of risks in doing business in Latin America. But if you're familiar with that and you're comfortable with that, then you can do very good. But it's something that you have to be aware of.
And also, currency is very different, obviously. Dollars, and what does a Latin American currency is?
So for Mexico, it's the Mexican peso. It's a very highly traded currency worldwide. It's sort of like the Latin American currency that allows you to enter other currencies in Latin America. So it's very heavily traded. Historically, it always devaluates. So our value always decrease versus the dollar. But right now it has remained stable, at least for the last 6 years. That's because we're paying very high interest rates on our our Mexican bonds. So that has sort of kept our currency stable. However, it tends to devaluate every year. So if you're a private equity that is in the U.S. or in Europe and your currency is dollars or euros, whenever you invest in Mexico, your investment can do really great. Like it can super outperform, have excellent growth and everything. However, if there's a devaluation of our currency, your return in dollars would be maybe zero or negative. And that has been the case for many years. Our private equity ecosystem has sort of imploded in the last years. And a lot of private equities had this issue because they raised capital in dollars, they invested in pesos, and then there was this devaluation of the currency. And then they found that even though their assets performed really great in terms of Mexican pesos, when you convert that to U.S. dollars, then the return is not as good as you expected. So, yeah, you need to sort of take that into account. It's a very important factor when investing abroad in different countries.
What about, we spoke a little bit about cultural differences already, but what cultural differences should U.S. deal makers be aware of when negotiating with LatAm founders or family-owned businesses?
Okay, this is an important one. Latins tend to find a lot of their identity their personality, their image through their business. They're very known for this guy is John, the owner of, and there's a lot of legacy going around being the owner of such businesses. So you need to be very respectful on the way you approach a transaction in saying that, hey, their legacy is going to continue, their name is going to still somehow be in the picture, their employees are going to be taken care of. Latins believe like their businesses are like their family. Mm-hmm. They're very attached. It's I always say that in the U.S. it's not personal, it's business, and in Mexico or Latin America it's always personal, then it's business. So yeah, you need to be very very. You need to find this connection with the owners, and then it's not going to be a matter of numbers, but it's just going to be a matter of if they trust you and if they believe that you are the next person to be able to take this company into the level that they expected, or what they want their company to become. Like we had this mandate at some point. We were acquiring mezcal brands at that time. And our client was a Coca-Cola bottler, okay, very big, very decent family mm-hmm. from the south of Mexico, and and when we approached these brands, one of them, they were very keen on selling their mezcal brand. They were very excited. We were sort of on price. We were sort of aligned. So everything was running very smoothly until we revealed who was the buyer or who was our client. And when they found out that our client was a Coca-Cola bottler, they were like, I'm not aligned with the Coca-Cola values. I don't believe in selling sugar, water. They're doing a lot of harm to everyone. And so even though everything, all the conditions, price, and everything was very well aligned, just because of that, they decided to abort the transaction. Yeah, people who sell mezcal, they believe that selling Coke is bad. I don't know, but yeah, that happened. So there's a lot of time you need to spend into building that connection with the seller or with the buyer.
Mm-hmm, mm-hmm.
Yeah.
So what mistakes do U.S. buyers make when approaching LatAm targets usually?
I would say that the main issue is to assume that a Latin American transaction will behave exactly the same as a U.S. transaction. As I said, Latin American transactions move a little bit slower. You need to be more comfortable with slight volatility and with some errors in the information. And if you're okay with that, you will be able to flow with the information. But I see a lot of U.S. buyers that whenever they see some mismatch in the numbers, even if it's very slightly small, they tend to distrust everything else. So I think that's the main mistake, to assume that a Latin American transaction is going to behave just like a U.S. transaction.
Mm-hmm. Mm-hmm. What about sellers? Do they make the same mistakes or different?
Oh, yes. and what I would say to Latin American sellers is, if you're approached by a U.S. buyer, take it super serious. Like, it's not like you're gonna sit on a cafe and write some numbers in a napkin, shake your hand and say, hey, we have a transaction. It's like U.S. buyers are very serious. They want to understand perfectly what they're buying. They want all the information to be very transparent. Everything needs to be cohesive. So Latins tend to take it very lightly. Maybe sometimes they jump into the call and they just blab around different numbers. And the U.S. buyer is going to write everything down. They're going to say, hey, you said that you were worth this, this, and that, and that you were going to, by the end of the year, you were going to be selling this and that. Why didn't you get there? Was there a problem? Why did you say that number? Blah, blah, blah. So I always tell Latin American founders, like, hey, what you're going to say in this call is very important. And what you're going to say right now, you have to repeat that throughout, all the process. You cannot say that you're going to, by the end of the year, you're going to sell, maybe 100 million, and then by the third quarter, your prospect is to sell 80. Like, there's a 20 million difference, and then there's going to be this discussion. So my message to the Latin American sellers is, take a step back, take their call, and say, hey, just let me regroup. I'll get back to you. organize your information, design your script, maybe find an advisor, and then start the process. Yeah.
Top 3 things U.S. buyers should do before entering LatAm market.
I would say the first one, talk to an advisor. Like, I don't want to, I have a conflict of interest, obviously, hire me, but but at least have a call with someone local who can tell you, hey, how things work around here in Mexico. Find a way to get an informal introduction to the seller. Try to get them, try to get to know them in a more informal way, gain their trust, and then start the process and say, hey, I'm interested in this and that. Give them time to prepare, and that might take like 6 months. So you need to be very patient. Things move a bit slower in Latin America in the business world, but I think those would be my recommendations for someone trying to enter in the Latin
So what is the
market.
longest period of time a transaction can go on for? It's like a lawsuit.
Yes. So usually transactions here in the U.S., they take around 8 months. That would be like my average time for a transaction here in the U.S. Whereas in Latin America, they take like maybe 2 years, 3 years. No, it's big. The difference is big.
Big process. Yeah. Important process.
Yes, they take a long time, and
Okay. So as we are approaching the end of this episode, what advice would you give to a U.S. company considering an acquisition in LatAm for the first time?
So I'd say talk to someone local first. Try to understand the ecosystem or how this company works, how to approach them. Maybe go there personally, find a way to generate a connection with this potential seller, and then build up from that, and then be patient. Like as we said before, this might take a long time. Here in the U.S., if you place a good bid with a good price, you could have a really quick answer. People in Latin America don't generally know how much their businesses are worth. Their expectations are generally much more higher from what they really are worth. So it's a game of patience and a lot of training the seller in the M&A world, because they're not very familiar with M&A as they are here in the U.S. So that's a big barrier to go through, and it takes a little bit of time for the seller to realize that what's their true worth and if they're willing to sell or not.
And if you were to give just one advice to LatAm sellers about, transaction in the U.S., what would you tell them?
Yeah, I would say first, if they are approached by a U.S. buyer, number one, get an advisor. People in Latin America are very reluctant when it comes to paying someone for advice. They feel like they are, they can take all the decisions, they know everything. And I see that in the U.S. it's not, it's the other way around. People tend to rely a lot on experts, and I think that's the way to go. So I would say that to the Latin American seller, hey, it's get some advisors, get everything going, understand what you're doing, take a step back, prepare the company, and then go through the process calmly, and whatever you say, always be consistent, and keep on the same script.
And what do you think the future of the U.S. LatAm M&A activity looks like?
Well, I think we're destined to be together forever. We will continue to see these transactions happening all the time. I think that Mexico offers a lot of qualified workforce, very hard workers, and a big opportunity to expand on the manufacturing side. So this is very attractive for the U.S. And I see that in the U.S. you guys are always growing, always with very innovative solutions, and always looking for different places where you can rely on good manufacturing. So I think Mexico will always offer that, and so we will continue to see all these transactions all the time in between both countries. I think we're very well connected throughout all our history. So we're not going anywhere, neither are you. So we're going to see our faces for a long time at least. And I think it has been a great relationship regardless of what you hear from the business standpoint. I think we have a very good understanding between Latins and the Americans.
Well, Joaquin, thank you so much for this conversation. It's been quite educational. Thank you so much for visiting me. Enjoy the conference. How can people get in touch with you and learn more about 414 Capital?
Sure, yeah. I have my in LinkedIn as Joaquin Contreras and 414 Capital. So anyone, feel free to reach out. And if you guys are looking to do some moves in Latin America or vice versa, glad to help. You don't have to enter into a business deal or contract or whatever. We can just have a conversation. I feel that's the best way to go about it. I think the world just goes around and around, and maybe a small conversation can lead into something maybe in the future. So don't be shy and reach out, and glad to help.
Thank you so much for joining me today. Enjoy the conference.
Thank you. Thank you,
Enjoy
Katie.
Chicago.
No.
And thank you so much for listening to the latest episode of M&A Access. Until next time, stay tuned.
These kinds of conversations are happening all the time. We'd love for you to join in, whether it's through our monthly webinars, our biannual conferences, or our SEMA certification, and then we have our chapter events across the nation all year round. You can find out more at amaonline.com. Until then, see you next time.